Hey guys, David Robinson here. Welcome to the apartment investing journey. We've got another great guest for you today. I'm excited to have Victor Menasce with me today. Victor, thank you for coming on the show. I appreciate it.
Great to be here.
So, Victor is a principal with Y Street Capital and host of the daily real estate Espresso podcast. He specializes in new construction projects in multiple asset classes, which I'm excited to dive into today. And he also focuses all across the country in Canada and US and has active projects going in multiple markets. And so really excited to get into Victor's story and his vast amount of experience, and looking forward to sharing some insights with you. But Victor, our podcast is all about the journey. If you don't mind, we'd love to just back up and hear a little bit about your backstory, what you did in the tech space, and how you got involved in real estate, and bring us forward to today.
Absolutely. Well, my pathway into the world of real estate investing was definitely not your typical journey. I started out as a microprocessor designer back, heck, even in the 1980s. That's kind of dating me a little bit. And I designed microprocessors in the communication systems. 50% of the phone calls in North America were routed by a chip that I designed for about a decade, and then went on to design all kinds of different embedded systems that are in use all over the world. Everything from color printers to I've got a chip in the Patriot missile, I've got chips in pachinko Apache slot machines in Japan with Sammy Sega and NVIDIA, all kinds of different Brocade fiber channel switches and storage networks from Hewlett Packard, and on and on and on. And I started my career just doing this kind of work, and progressively did a bunch of different M&A deals, took one company public, and eventually on about my 18th trip to Tokyo, when we were building a new cellular network for a carrier in Japan, decided it was time to do something different, and basically took a hard left turn in my career and moved into the world of real estate investing on a full-time basis. So not your typical career path into real estate investing, and that's kind of where I've been ever since. Of course, when I made that transition, it was at the height of the downturn, so I saw that as an opportunity of a lifetime, which it was.
And so, rough estimate of what year was that when you decided to make that left turn? I mean, you said the height of the downturn. Are we talking 2008 or?
2009 was when I made the decision and resigned my position as VP of engineering, and then the company hired me back as a consultant 2 days a week for basically the same money. So that kind of extended my financial runway to make that transition. If I was certainly to go back and do it again, I would do it differently. I probably would not have resigned. I probably would have taken a portion of my salary and gone and hired people rather than trying to do it all myself. I would have probably shaved a few years off of my growth curve. It's funny how many things I knew from the tech industry that I did not think were portable, when in fact they were. And if I had just stuck to that, I would have saved a ton of time and a ton of heartache and aggravation, because what I did is I went from the top of one industry and I decided to come in at the very bottom of an industry thinking that I knew nothing, and work my way up from the bottom, and that was probably a mistake.
In hindsight, what was portable? I mean, I would have the same, not knowing much about, microprocessor design and your, career before your real estate career, but how maybe shed some light on what was portable.
What I discovered was that the real estate component was actually a very small component. It's all the other elements of business, how to manage projects, how to lead an organization, how to lead staff, how to raise capital. All of those things were completely portable. And I had to rediscover that. I had to rediscover, convincing an investor to invest in a real estate project is in fact no different than convincing a venture capitalist to invest in your, great idea. In fact, it's a lot easier because in the case of real estate, you've got a proven market with a proven product. And it's a whole lot easier to raise money for that than to say, well, I'm going to go develop this new thing for a market that's not even developed yet. And trust me, we're going to build this market at the same time as we're building the product, and it'll all be great.
Yeah. It makes a lot of sense. Those business principles definitely translate. And to your point, real estate, the actual acquisition of the real estate is just a small component of the whole business model. But that's assuming that you move into large commercial real estate acquisitions. So that lends me to the question, which is, where did you start? You decided to make that transition, that left-hand turn in roughly 2009. Where did you begin?
We started flipping houses. We started acquiring small assets, many of them in Chicago, Florida, places like that, Arizona. And one of the things that I discovered along the way is the most difficult thing to do is to be too small. A lot of people think that the constraint is money, and so they start small. They say, well, I'm going to buy a house in Detroit because that's all I can afford. When in fact, the problem with that mentality is that it takes a breadth of skills to run a business. And you're saying the mindset is, well, I'm going to grow organically. I'm going to grow from one to two to three to four and so on. But the problem is you get stuck. You get stuck in this low Earth orbit that you'll never escape because you don't have the breadth of skills or to run a complete business. And those projects are too small to afford all of the skills that you need. So you get stuck because you just get stuck in a place you can never escape. It's actually easier to go bigger. And it sounds counterintuitive, but it's much easier to go bigger because those bigger projects generate enough income that you can feed 7 families or 10 families, let alone one, and you're better off going that way and you get there a whole lot faster.
Yeah, I love that. When was it that you mentioned that by starting small, that you sort of get stuck in that space where you have to, it's a challenge to break free of that model. How did it progress for you? You started flipping homes in Chicago, Florida, Arizona, and here we are, you're 2009, 10, 11, 12. So you're riding this down and buying, real estate at a discount for what we would,
Yeah.
3, 4, or 5 years later would realize was a steep discount. How did you get yourself out of that space of flipping properties, single family fix and flip?
I got introduced to a couple of folks out of Philadelphia who were doing some good work and realized that their constraint was they were lacking access to capital. So we ended up forming a partnership. I ended up bringing the capital, and they managed the operation, and we very quickly transitioned. And we're talking about the old core of Philadelphia. Philly's a very old city, and so you have all these turn of the century 1920s vintage townhouses, just fairly high density, and the what we did is we often demolished the inside of these buildings and put new buildings on the inside. So we were able to repurpose, we're talking 2011, 12, 13. And what that did is it allowed us to move into quasi-new construction. You could still buy things for far below construction costs, so it didn't make sense to build new. But if you could preserve the existing structure and put a new building on the inside, you could make the numbers work. We moved and we started doing these land assemblies, acquiring things at a very low cost. And if we put together three properties, that would be a 9-unit building, or put together 5 properties, it might be 15 units, and so on. And we started doing these small apartment buildings where the margins were very strong. And that was really the genesis of a strategy that we call buy on the line, move the line. And that strategy exists. You can play this out in any city in America. Absolutely. So what is that line? That line is on one side of the line, you've got a hot gentrified neighborhood, you've got the Starbucks and the art galleries and all the rest. And you go 2 blocks too far and now you're in the hood. And wherever you sit, I'm sure you can visualize that line. Every city has it. So the key is to just buy a little bit on the wrong side of that line, redevelop the line, and guess what? Now that line is on the other side of your property. And of course, there are no comps for brand new product in the hood. So where are you going to get the comps? Well, it's from a block away. So you're buying at a discount, you're creating tremendous value. You might not get 100 cents on the dollar on your appraised value, but you'll get into the high 90s.
Hmm.
Now, you go too deep in the hood, it doesn't work. Or if you don't do enough, then nobody notices and nobody cares. But if you put a tiny bit of scale behind it, and the marketplace says, oh, the line has moved, I get it. And so it's playing a large developer's game on a small scale, but it absolutely works. Now, you might say, I don't have the scale within my own organization to go do 5 of these at once. Okay, bring a few friends along. This is a team sport. So
Yeah.
that's how we made the transition.
So I have a few more questions about sort of the journey and a couple pieces there. But before we do that, maybe shed some light for our listeners on what you do today. What does your business focus on at Y Street Capital?
So today we're in multiple different asset classes in multiple different markets. It's predominantly development focused. We do a lot of land entitlement where we're taking raw land, might be agricultural land, might be land on the boundary of a city and getting it annexed into the city. We have a little over 2,000 acres in our pipeline in that portion of the business. And this is really winning the land lottery, if you will, because agricultural land almost anywhere in North America is worth anywhere from $3,000 to $10,000 an acre, whereas residential land zoned for residential is at least 150 grand an acre, probably more in a lot of cases. And if you can, and the value of the land is based on what you can do with it. So if you can change the use of that land and get it entitled, get it subdivided, do all of those site plan developments and get that all approved, you can create a tremendous amount of value. Now, a lot of people exit at that point. A lot of people then hand it over to a builder that will go vertical. In some cases, we do that. In some cases, we go vertical ourselves, depending on what the asset is. So we today take ground up land and we take it right through to vertical construction, usually to hold, sometimes to sell, but usually to hold. And like I said, we're in multiple markets and multiple different asset classes.
And just to put a bow on something you said earlier, I'm going to be bouncing around here a little bit, but it's just sort of the way my brain works here. You mentioned that when you started to scale, it was with a relationship that you had built with a couple partners that were focusing on the Philadelphia market, and that their major constraint was capital. This is before the Jobs Act of 2012. Is that correct?
Correct.
And so what did that look like? I'm just curious. I wasn't involved in any large commercial multifamily, capital raising efforts back then. I'm just curious what that world was like and how you were able to bring that piece to that partnership back then.
We started out with a lot. So I'm based in Ottawa, Canada, and I had access to capital here locally that I brought into my company, often just purely as debt, and then we would redeploy that in these various projects. Since then, we're very actively involved in syndications. So we syndicate a lot of our deals, and obviously that's got to be compliant based on the jurisdictions, both where the project's located and where the investors are located. So today we try to keep investors local to the projects because then it gets pretty complex. But depending on the jurisdiction, we'll do an SEC exempt offering, whether it's a 506C or what have you, depending on what the nature of the project is.
Sure. Okay. Yeah, thank you for that. And I think you clarified what I was curious about. And it sounds like you brought a lot of investors from your fix and flip business that you were really using as debt for your fix and flip strategy, and brought those investors in with the partnership with the two partners in Philadelphia. Did I catch that correctly?
Yes, that's right.
Okay.
Yeah.
Okay.
Yeah.
Perfect. So I want to move forward to your business today. You gave a great description of what you guys do, which is, there's a lot of emphasis on focus and getting really narrow on your specialty in the world of real estate. Yet, I think some would argue that you've been able to stay fairly broad, even though you have, a focus on development. But you're in a lot of different markets and a handful of different asset types. What
Yeah.
is the opportunity to a business model like that? And also, what are the challenges that you face?
Yeah, that's a great question. So for us, it's really starts with the people first and foremost. Making sure that we've got the right partners. I mean, anytime you look at anything, there's three things you got to look at. Number one, what is the need in the submarket, and I mean that in the local sense of that, where it's not just this asset class in this city; it's this asset class in this neighborhood. So, for example, I'll use Philly as an example. When we were building in North Philly, we discovered fairly quickly that there was a surplus of 3, 4, and 5 bedroom units, but an acute shortage of ones and twos. So what did we build? We built ones and twos. But if you look at the market averages, look at vacancy rates and all that stuff, those numbers would obscure that fact. You wouldn't be able to see that unless you actually got down to that very granular level. So that's what we attempt to do, is to really understand the market in that hyperlocal sense. Now, you might ask the obvious question, well, how does some dude from Canada get that deep local knowledge in Boise, Idaho, let's say?
That was the next question, so I
Right?
appreciate you asking it.
Right? So again, it's local partners, folks that have that domain knowledge, but then we take it a step further. Because, for example, even the local experts who have the relationships with the folks in the planning department, they don't attend every single planning meeting. They don't attend every single council meeting. We will actually go and review the last 2 years of city council meetings, and we will actually we'll get a full text transcript of all of those meetings, and we'll go through that and understand what the hot button issues are, so that we try and get as smart as a local person, because we know that in order to compete in that market, we have to get to that level. Otherwise, we're going to be outsmarted every single day of the week.
And is it fair to say that you only go into a market where you have a local partner or local operator?
For the most part, yes. Yeah, for the most part, yes. I mean, there's a few exceptions to that. Like right now, we're doing a project in Colorado Springs. It's quite a large project, but we've put a strong team in place. It was a big enough project to warrant. We had to recruit the right talent. Usually we start with the people. We rarely start with the deal. That Colorado Springs would be an exception to that particular case.
Yeah, makes a lot of sense. So you referred to some of the challenges that you face.
Yeah.
What's the opportunity for staying that wide? Why would you choose to really stay that wide from an asset type, asset class, geographic location perspective?
One view of the world is it's kind of all the same if you know exactly what you're looking for. So we look for market situations where there's an excess of demand, a shortage of supply, where that supply demand imbalance is going to be persistent for a good long time. We don't want to be in a market where we're competing in, let's say, the auction with other players, because in an auction environment, you're almost always guaranteed to pay too much. If I go bid on a 400 unit apartment complex, I'm not going to be the only bidder. There's going to be 20 other offers in there. And if I'm the winning bidder, I'm almost guaranteed to pay too much. So, which is why we go after development. So we'll play in those same markets where that activity is happening, but we won't play in the auction game. We'll say, you know what, I can build this for a third less than it's going to sell for at auction. So I'd rather build that, add that supply to the market, because there is that sustained mismatch between demand and supply. So that's what we look for, and that just tips the odds in our favor. We want to see that influx of population. We want to see that influx.
Yeah, you were cutting out there just a little bit at the end, and just for everybody who's listening, if there is a little bit of delay and latency, it's Victor is stuck in quarantine in Mexico, and so
That's right.
he doesn't have his normal setup that would be great for audio right now. So, but we appreciate you battling through it and jumping on today. So let's talk about building a team then, because
Yes.
you mentioned early on that one of the challenges in staying small is, growing organically is prohibitive from a perspective of you have to have all the skills that require running every aspect of a business, at least initially.
Yeah.
And you alluded to the fact that a bigger business actually is more efficient because you can bring other people to the table that have a unique skill set that can benefit the entire company. What has that process been like for you in building Y Street Capital?
We started out with a very strong core team where the skills in that core team were highly complementary. So if you look at the core, the four of us, we're all vastly different in terms of our skill sets and in terms of our attributes. We've got some folks that love to talk on the phone and rub shoulders with investors, and then we've got one guy who hates picking up the phone. We've got one guy that's just really comfortable, not only comfortable, absolute wizard in Excel, and he does an awful lot of our underwriting. So we've got this breadth of skills. We have a strong engineering base within that leadership team, and then we've augmented it where we've had a tremendous amount of success in bringing in really good skills is bringing folks in initially in an internship role. And then, because if hiring virtual assistants, maybe geographically dispersed, you can often delegate work, but it's very difficult to delegate responsibility. And when we bring folks in an internship capacity, it's because they actually have the time that they can devote. And where we've had a tremendous amount of good fortune is in actually bringing people out of the military, folks with very good skills, and where they're working their way out of their military career into the civilian workforce. And there's a fairly lengthy period of time where they're able to bridge through those two. In the States, there's a program called Skills Bridge. Many countries have those types of programs available, and we've been very successful in bringing in some extraordinary skills that way.
And so initially, how did the four partners that your main leadership team, how did they come together?
We were working together, kicking ideas around, and at a certain point, we just said, you know what, we should actually be doing this together. One particular project landed in our lap that was an acute problem for a seller. We decided to collaborate on it. Two of the partners had already formed the entity and asked me to join, which I did. And then we attracted a fourth several months after that. And so that was how it happened.
Great.
Yeah.
So if I understand correctly, you're based out of Canada, even though you're currently in Mexico. Is that correct? Okay.
Yeah.
What's it like doing business real estate deals where there's some challenges when you're bringing capital, some hurdles, I should say, that need to be overcome as you're raising capital from Canadians and bringing that into projects in the U.S. I have not done that. I'm just somewhat familiar with that challenge or that process. Maybe shed some light on what it's like living in Canada, but also investing in deals where you're raising equity probably from U.S. residents as well as Canadians.
Today, we do very little cross-border in terms of movement of money. So, for our Canadian projects, we try as much as possible to raise that money in Canada. For our U.S. projects, likewise. And there's a few logical reasons for that. I mean, number one, it carries with it, a bunch of tax burden, is more complexity, number one. But number two, you're also assuming a certain amount of foreign exchange risk. And that could be a foreign exchange gain or a foreign exchange loss. And at the end of the day, these folks are real estate investors. They're not currency speculators. So that's we try and keep that separate. There's a little bit crossing in both directions, but very, very little.
Okay. Yeah, I made some assumptions there. Thanks for clarifying that. Well, look, this has been a great conversation. We've covered a handful of different topics, and I think your model is very interesting and intriguing. I want to start winding down our conversation a little bit
Sure.
here, but I've got a few final questions for you. The first is as it relates to your podcast.
Sure.
You do a daily podcast that's a different version than a lot of the other podcasts out there, including my own. Where my understanding is that a lot of your episodes are really short episodes on a very specific topic. Is that correct?
Absolutely. So it's the Real Estate Espresso podcast, and it's literally your morning shot of what's new in the world of real estate investing. And the show was designed for a very specific purpose because, like you said, a lot of the podcasts out there follow a formula where they're very interview based. Some of them are fairly long, you know, and a lot of people just don't have that amount of time. So, and the question for me when I launched the show was, well, it's already a bit of a saturated airspace. So if someone's going to listen to me, who am I going to kick out of their list of podcasts that they're currently subscribed to? And there's some very good established shows. So, am I going to kick out Oprah Winfrey or am I going to kick out Bigger Pockets? Like, I had to be realistic about that. So how could I design a show that would compete without competing? And I just saw this opening where I said, what if we did a show that was literally 5 minutes on the weekday edition, where it's just a solo episode with me talking about one topic every day. And then the weekend edition are more of that traditional interview, but again, a shorter format show because people don't have 45 minutes or an hour or 2 hour attention span. Great as Joe Rogan is, not everybody can listen to 2 to 3 hour shows every week. So, and the feedback from the listeners is that it's working. So, we're now just closing in on a couple of million downloads, which feels great. And we've got a strong, loyal listener base. And the feedback from the listeners has been awesome.
That's great. Well, congratulations on your success there. Next question I've got for you is, what is the biggest challenge that you're facing right now in your business?
Probably we're trying to do too much. We've got a lot of projects underway, and so we've grown the team. We've got a lot of projects underway, and it's really all about execution. Every single one of our meetings, our daily meetings, are all execution focused, and so that's what has all of our management attention right now.
And is there, you mentioned obviously your meetings, your daily meetings. Is there any systems, processes, tools, strategies that you're implementing that are helping you to overcome that challenge right now?
We have tons of systems and process, and that has helped us a lot. A lot of that we've implemented over the last 18 months. We use all kinds of different tools. We use Asana, for example, for tracking issues and project deliverables. We use Slack for internal communication on the breadth of different projects. We use a fairly heavyweight system called Procore for construction management. It's well known in commercial construction circles, not so much in small business. We use Syndication Pro for managing all of our investor relations. So we have a multitude of different tools that we use that underpin the core of the business, and that's been vital.
Yeah. What's something that you're just absolutely crushing right now in your business, just knocking it out of the park that we could all learn from?
Well, we just completed a project in a smaller town called Lake Charles, Louisiana. This particular project was an 80-bed senior assisted living project built in a campus of 16-bed homes. And that project got completed in August. We accepted our first resident. We are now essentially cash flow positive as of this month. And last month we were announced as the winner of the Senior Housing News Architecture and Design Award for memory care for 2021. So we're thrilled about that, and that project is doing incredibly well. It's difficult. It's a difficult business to be in the midst of a pandemic, And we've seen an awful lot of our residents come from other existing senior facilities where they hated it, and they're loving both the culture and the experience over at the Sage Oak.
Well, congratulations on your success there. What's the best way for our listeners to connect with you and learn more about what you have going on with Y Street Capital?
Happy to connect at our website, ystreetcapital.com, or if love to have them as a listener at the Real Estate Espresso podcast, and that's available on more than 20 different platforms. So wherever you listen to podcasts, I'm sure you'll find the Real Estate Espresso podcast, and it's spelled like the Italian coffee, Espresso.
Awesome. We'll have links to both of those in the show notes, as well as Victor's personal page. Victor, thank you for coming on and sharing your journey with us and giving us some insights into your business and some of the things that you've learned over the last many years in the real estate business. And thanks for sharing your background too, and talking a little bit about how you transitioned into the space and what you guys are working on moving forward. Again, if you've enjoyed our conversation with Victor, go down in the show notes right now, click on one of those links to connect with him. Victor, thank you very much for coming on, and I look forward to connecting with you again soon.
Thank you, David.